I think what I've come to realize is that tokenization doesn't make any liquid asset liquid.
We've got Carlos Domingo, CEO and co-founder of Securitized. Carlos, welcome.
Thank you. Thanks for having me.
One thing that we just discussed off camera is tokenization. Can you tell us, well, CEO, co-founder, we probably know what you do, but what does Securitized do, like in a elevator pitch style?
Yeah, Securitized is a tokenization company. We focus on what now the crypto people call the real world assets, but within real world assets in particular about securities. So we tokenize securities, anything like funds, equity, securitized products, structured products, bonds, ETF, etc. That's the part of the real world asset ecosystem that we focus on tokenization.
So I was just talking to Arthur Brightman, Tezos, and they're talking about tokenizing uranium, right? And so I guess my question is, besides funds, you guys have been very successful with the Biddle Fund from BlackRock.
Yeah.
What else can be tokenized?
Well, so uranium is a commodity, so some people focus on tokenizing commodities like uranium, gold, etc. Then there is dollars, obviously. That's the most, if you want, successful tokenized product because stable coins are tokenized dollars.
Nice.
And then the thing that is adjacent to dollars is treasuries. These are liquid assets that are yield-bearing, which is debt against the US government, so similar to a dollar. But I use in traditional finance, most people use treasuries, not dollars, to be able to manage the treasury of their companies, to post collateral, to use it as in repo transactions, etc. So tokenized treasury is something we have been focusing on the last year or so with BlackRock, as you mentioned. And it's been very successful. When we entered the tokenized treasury markets, it was $200 million in size. Now it's 6 billion plus, so it's like 20x in a year. It's probably the fastest growing part of the crypto ecosystem. And we're responsible for like 44% market share, which is great. And then I think that other, products on the yield curve that have higher yield, maybe higher duration, a little bit less liquidity, maybe higher risk, those are like the ones that will come. And we have also recently released a tokenized credit fund, private credit fund with Apollo that in very, very small amount of time exceeded $100 million. So I think that's another very successful example.
So yeah, that's very interesting to me. And so I'll tell you what my thought process was. I always thought that assets that were illiquid, right, would be the best assets to tokenize. Correct. Because they need the liquidity. And I've always thought that something like, like treasury bonds or treasury bills, because those are being traded already and it's more or less electronic and digital, that they wouldn't benefit that much from tokenization. What's your tokenization thesis, I guess?
That's a very good thing. So if you ask me when I started the industry 6-7 years ago, I would have told you the same thing.
Right.
Tokenized illiquid assets, real estate, private equity,
right,
alternative assets, etc. I think what I've come to realize is that tokenization doesn't make any liquid asset liquid. Tokenization actually makes it easier to transfer it. It makes it easier to settle a trade. But that is not enough to create liquidity around the asset. To create liquidity, you need to have buyers and sellers.
Right.
And then those assets, by definition, are very liquid. There's very few buyers, there's very few sellers. So they're creating markets. Even if those markets, you could create them more efficiently in tokenized form, but the markets do not exist, and they will not exist just because you tokenize them. So I kind of became like 180 degrees the opposite direction, saying tokenized liquid assets, which you're absolutely right. These things on traditional markets, they trade already to some extent efficiently. But when you put them on the crypto rails, you can increase the efficiency 10x, right? Like the tokenized treasuries that we issue have like, daily dividend payouts. They are instant issuance. They have instant liquidity on chain. They're peer-to-peer transferable. Like they have some characteristics that the traditional treasuries that are off chain do not have, if they are electronic, because they're not like fully digitized on a really good ledger like a blockchain. So, and I think those are easier to then, integrate with the rest of the crypto ecosystem, which for the most part is designed for liquid assets that move and trade fast, right?
Right. And then how do you get the incumbents? So you already have, whether it's a clearinghouse or, the DTCs of the world. How do you get those guys on board? Because these are the traditional places where people trade bonds and stuff like that. So once you tokenize a fund, you have to have some kind of crypto infrastructure or provider who provides that
Correct.
infrastructure. Do you see it being a challenge to onboard traditional institutions to tokenized assets?
So there's many layers when you say traditional institutions. Who you're talking about? Asset managers, which are and issuers, which are at the top. They are the ones that create the assets.
Right.
Those guys are already onboarded. Like we have BlackRock, we have Hamilton Lane, we have Apollo, we have KKR, and there is no shortage of people that want to tokenize assets.
Right.
Then below are like let's say the exchanges that trade those assets. Those exchanges, I think today they have a very hard time adopting tokenized assets because their own infrastructure has been designed around centralized trading and centralized securities depositories like DTC. And DTC is actually, you don't need when you use a blockchain, because you don't need a central securities depository to track the ownership, because the blockchain does that for you. So it's an intermediary that I don't think it will continue existing in the current shape and form. In the future, maybe the company stays around, but the role they play gets displaced by a blockchain. And I think this is why, they kind of feel threatened probably about the power of a blockchain to disintermediate the role in traditional finance.
Right. That's interesting because it would be interesting to see if they try to fight tokenization or they start to innovate and start tokenizing.
Correct.
Yeah.
Regulations protect them to some extent. Like there is a lot of trading rules for, publicly traded securities. It's called national market securities.
Right.
That will make these incumbents to stay there for a long time.
Right.
And they will, in my experience, having been working for an incumbent in a different industry, in telecommunications, they will have some innovation on the side, but will be like a side business, not to disrupt their core business, because that's where they make money, until the side business becomes the biggest one. The example I was going to tell you, in telecommunications, when things like WhatsApp came up, WhatsApp disintermediated the SMS that the telcos did, right? So the telcos, they tried to fight back with regulation. Or WhatsApp doesn't have lawful interception. It's not interoperable across the different devices, etc. So instead of trying to create a version of WhatsApp, which had a completely different business model, they tried to stop them. But then WhatsApp flourished, and today everybody uses WhatsApp, nobody uses SMS. So I think, my view is we will see the same evolution in capital markets, that some traditional intermediaries will eventually disappear.
That's interesting. So let's go down some of the products that you, just for the audience who are not familiar with tokenization. I think I read somewhere a big consulting company said it's a $16 trillion market by 2030. They were actually talking about illiquid assets.
Correct. They include real estate and things like that, which I'm a bit skeptical, as I said.
Right. But either way, it's going to be a big, it's big
going
business.
to be way bigger than it is now.
Yeah.
100%.
So let's go down some of the products that you guys have at Securitize. Maybe you can just tell us the companies, the names, and the AUMs. I know you've got the big one is BlackRock Biddle, which everyone knows. Yeah. I think 1 billion AUM now.
It's close to 3 billion now.
3?
Yeah.
Oh, okay. That's news.
We continue growing.
Yeah, and then you've got...
Then we have the largest private credit fund with Apollo, which is around 100 million. Another very good name. Then we have the largest institutional fund, which is Blockchain Capital, which is probably around 250 million. Then we have the largest tokenized equity from a public company. It's a company called Exodus, which is a crypto wallet that is publicly traded in New York Stock Exchange. Their market cap is 1.5 billion, and we have 450 million or so on chain as tokenized equity. So those are the main 4 categories where Securitize has the largest asset in every category. So we're by far the dominant company in the space.
And you just had VanEck launch.
We just announced VanEck, which is very exciting because, VanEck is a very well-known company in the crypto space. They've been very, very crypto-friendly. Jan VanEck has been one of the first advocates for the Bitcoin ETF back in the days, 10 years ago. So we're very excited to just partner with them. So the fund is still small because it just launched, but I have a lot of expectation about the growth of their product. So
that's interesting. And I noticed you've got the venture capital funds and things. It's very interesting.
Yeah.
Like I said, I used to be a skeptic, but it looks like I've been proven wrong.
And this funny thing, we've proven that the market exists, and I think that we just need to make it bigger and growing faster. than it is today. But I do not think that it will be $17 trillion. But if it's $1 trillion, man,
that's
we've
good
won.
enough for now anyway.
Because entire crypto is $3 trillion, right? So tokenized assets naturally over a very long period of time should get bigger than crypto. But if within the next few years, 3 to 5 years, we make it to be like 1/3 of crypto, I think it's a massive success for the industry and for the players. So.
And so my last question would be, what are you most excited about, either in the RWA space or just in crypto in general?
In the convergence, if you want, of crypto and RWA space, I think I'm very excited about precisely this, how RWAs and DeFi are going to converge and they're going to interact. We recently launched an example of that together with Apollo and a couple of other crypto firms, one called Gauntlet, which creates vaults that use Morpho for crypto lending. So we can basically take the credit fund from Apollo, tokenize, and then turn it into doing recursive lending on crypto. We can turn it into from a 9% yield asset to like a 15 to 20%, which I think is very interesting because this shows the power of blockchain. This is something that will be impossible to do in traditional finance because it's impossible to subscribe and lend and borrow, subscribe and borrow as quickly as we do it with the smart contracts and with DeFi. So it's a very interesting, and on this narrative of the convergence of DeFi and RWA, we're launching a new chain with our partner Athena, where we're going to try to bring their DeFi assets and DeFi connectivity with all the RWAs that we have to just really create a place where this space can flourish. So
Athena, those are the guys with the stable coin, right?
Yeah, correct.
Got it. Interesting stuff. Well, you guys have heard it first here at Bitcoin.com. Carlos Domingo, CEO and co-founder of Securitized. Thanks for listening, Carlos. Thank you for coming.
Thank you. It's a pleasure.